Good morning, everyone, and welcome to the PivotBoss pre-market video for Monday, October 28th, 2019. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. What you'll see here is price is currently trading just above the previous month's high price at this moment. Price trading just above the previous month's high. It hit that level on Friday, now pushing through it here to begin the week. So now it's also above the previous week's high as well. So we'll continue to watch this level here very closely. Again, this is about as high as we've ever been in the ES here, and to find acceptance through this zone after rallying from 28.55, that would be a stretch, but we could see price push through somewhat here. Obviously, we have the FOMC statement and Fed interest rate decision later on this week, so it's Fed week. Wednesday, 1 p.m., we'll get another key level. This FOMC key level has been very important the last few rotations. We've seen price go up and sideways into those last two, followed by major selling pressure back to the 200-day average. So we'll see if that pattern remains true, but it's very clear that this market is developing a very large range at these highs. This large range right here has been about 6 months in the making here. As it's continued to develop, we may see further development, but eventually we could see a major breakout from this compression that could be 3 to 6 months of trending behavior once the thing sees expansion. So continue to watch that pattern as it develops. Right now, on a very short-term basis here, if price cannot hold 30.20, that could open up quite a bit of near-term weakness. So that's going to be the level to watch here early on. We could perhaps fall back to that zone, but it could be a short-term buying opportunity unless proven otherwise. All right, let's take a look at the NQ here. The NQ has pushed to new highs here and is now above the all-time high here, which is 80.51.75. We're currently trading 80.66 and above that level. We're above the key range high, which is very important. As you know, these key ranges can identify important areas that can be faded or see expansion through those zones. Right now we're trading completely above that level, and if there's a failure here, if it can't hold 80.50, then perhaps we see a fade back towards 7,800 pretty quickly. This is rather a little bit lower actually, 76.30. That would be the midpoint of this key range. So you fall back to the middle of that zone in most cases when you reject up at these highs. With a shot to go across the range as well. So we'll continue to watch this. This one as well continues to develop within a very large compression. That compression, perhaps it's already seen expansion to the upside depending on how you want to draw it. But 8K is kind of the big level here. To be above 8K and to hold above it would be something, a show of strength. If price were to fail to hold 80.20, 88K in general, that could open up that failure we talk about. So right now, any pullback to 8K could still be a buying opportunity until proven otherwise. All right, let's take a look at crude oil. Right now, crude oil off the day's lows, mostly a doji day. It has only traded 61 ticks of range today. That's 40% of ADR. The ES and NQ are both at 30% and 27% respectively, so they're trading much more quietly in terms of range. But crude oil here has done a good job of lifting off of recent lows. It has broken through that 55 level here. It's on a pretty big show of strength, and now it's holding as well with higher highs and higher lows day over day. This looks fairly strong. Does not appear to show rejection just yet. As a matter of fact, any failed new low could still be a great buying opportunity for continuation. This may have more upside to about 58. 58 is the midpoint of the previous month's range. So in rejecting the previous low here and taking the previous close bid, that would suggest a move to the previous month's midpoint, previous month's high being way up there. So that's about 58. The expectation is that we likely continue that way. Perhaps any pullback could still be a buy, even as shallow as 55, so, or as deep as 55. If price were to get as deep as 55, there could be a +3 back toward 58. So that's the swing idea. Right now, intraday, this thing's very quiet, and it appears that any pullback could still be a short-term buying opportunity today. All right, let's take a look at gold futures. Gold's getting a little bit of a move right now on an intraday basis, seeing a push to new lows and below the previous session's low. You can see right here 1525 continues to be the big level to watch. We had a pretty solid rally in gold on Friday, but price was not able to hold above 1520. It got a pullback just below it and couldn't hold that first LVN, and from then on it was a sell-off the rest of the day. That was the key level to watch. It just couldn't hold it. And again, it just shows how this market has continued to be offered at prices above 1520 and below the 1525 key level. Also above the FOMC key level. That's the September FOMC, 15.1580, and so far has not been able to close above that level, rotating back down each and every time. This market continues to be mostly range bound, which we talked about before. 1465 to 1525 is kind of the range here. We could theoretically trade back and forth within that range and still be range bound. We need to really break either above this level and get going to the upside, or we need to flush and run some stops below the 1465. So again, we're still range bound. We still have kind of a near-term downward trend, or medium term, I guess, but it's not significant. Obviously, the long-term trend is still intact, and right now the short-term may have just exhausted itself to the upside with a failure here. So we may be looking at a little bit more pullback. But again, even if we do pull back, it could be more chop until Wednesday's market, which is the FOMC day. Alright, that is it for now. We'll see how this plays out heading into the new week of trading. Good luck, trade well, and I'll see you in the trading room. Take care.